Hello, and welcome back to the Private Client Podcast. My name is Charlie Chami. I'm an independent financial advisor and director at Glams IFA and co-founder of the Private Client Network. We're a networking group for private client professionals trying to close the gap between our various professions in order to increase our collective knowledge, improve the service to our clients, and grow our respective businesses. Today, I'm delighted to be speaking to my wonderful co-founder, Simon Tutton. Simon, thank you so much for joining me.
Thank you very much, Charlie.
So I have a confession. Obviously, we've been working together for a long time, and I thought I had a solid idea of your career history. But I have to say, I was going through your LinkedIn profile, and there were some surprises in there. I knew you studied at Glasgow. I didn't know that you studied management at Warwick, but I also didn't know some of the things you did before what most people will know you for, which is EIS and VCT, basically seed investing. So if you don't mind, can you give us a little bit of an idea of sort of post-university career history? Did you always want to go into financial services, and a little bit about the start of your career?
Yeah, no worries. I've had a slightly peripatetic career, to be honest, in terms of what I've done. After university, I did a ski season in Chamonix. That was my job there, and I worked in a bar. So that was definitely only related to financial services in the plenty of people that worked in it came into the bar.
Yes, I bet.
But at that point, not really on my radar particularly. I did a stint with an MEP to learn all about how the political world functioned in Europe when that was a thing for Britain.
It wasn't Farage, was it?
Uh, Thankfully not. And following that, I applied to a graduate scheme for local government and spent 2 years on that graduate scheme, as part of which we were studying at Warwick Business School in management. And that was a really good experience and kind of formative in some ways, because before you try work, you don't really understand which aspects of work you're going to like, what cultures you're going to thrive in. And whilst I enjoyed the kind of challenge of the different policy areas, because obviously local government impacts on lots of areas in people's lives, my personality slightly butted heads with the public sector in terms of how slow it is to move. And I suppose my outlet for that was, my final project was to write the feasibility study for the establishment of a community foundation, which is a geographically bound charitable trust. I think there's pretty much one now in every area in the UK now, but at that point there wasn't. And I wrote the feasibility study, and by the end of it, we concluded, well, yes, it is feasible, but it's not going to happen unless someone does something about it. So I got some funding and spent the next 18 months setting the charity up, working with potential trustees and then the board of trustees, and raising some finances for the charity, which brought me into contact with wealth managers, because they typically manage the money for charities. And if I'm being honest with you, it was probably the kind of economic side of it that really interested me. But I suppose that's not really the day-to-day of most wealth managers. So I eventually, when we moved from Yorkshire to Liverpool, I applied to a wealth management firm and got in and got trained up.
So that was the entry. And was that a direct sort of result of interacting with wealth managers and in the fundraising role? Or was it just it
Yes.
piqued your interest?
Yeah, it was. I found it just really interesting. It was having studied history and French at uni, I hadn't really had exposure to, knowledge of the markets, how economics impacts on that. I had studied some economic and social history, but that was more 19th century focused. And obviously I just found it really interesting. And the firm I joined was a large American stockbroking firm called Edward Jones, and they trained you up as a stockbroker and a financial advisor at the same time, and they kind of hot housed your training in London, and yeah, it was really good. Few months of getting qualified at that stage, so a real eye opener, to be honest.
Yeah, I remember them. They were really big at the time because I think this is sort of back in the days where I was sort of Googling, do I want to go into financial advice in the sort of mid
Mm.
2000s, I guess it would have been. And I do remember their job adverts always would come up.
Yeah, it was very much a kind of entrepreneurial role in that they were pretty old school. It was a 19 I mean their heyday was probably the 1970s in the state. They say heyday, they're absolutely enormous, but they're growing all the time. But their model was developed in the 70s, and it was based on opening up little offices in typically affluent areas, and you go out and you'd actually have to go door knocking to build a list of potential clients. So yeah, to build your own practice, and you had to. Um, it was a good environment in that you actually had to go out there and properly build your own business, and it was a very direct and quick way of doing that, albeit not very British, not very modern.
I remember you saying that to me once, that it's a model that, because there's a lot of cultural differences between here and the
Mm.
US. And I think in the US they've got a lot. They're a bit more of a startup culture. I think they appreciate people putting in the effort and doing it. Whereas I think here maybe it's like, why are you bothering me?
A little bit, but I mean, I think the American colleagues who stood out for their generally for their lack of sense of humor, they would. The differences they said was you got more extreme reactions. You got lots of people who were like, "Yeah, go, you go for it," and you got people kind of, effing and jeffing at you. Whereas you didn't get that in the UK. You just got either slight suspicious treatment or but you did also get people saying fantastic, because this was back in late 2007, 2008, when, the world was falling apart financially, and, people were not feeling positive about things. So
Yeah,
to actually go
what
out there
timing.
and drive your own business, some people really appreciated that. So and it did work. It was a direct way of getting to meet people, and it's an extreme networking, put it that way. Um,
Yeah, no, it sounds like it. So worked at a few different advisory firms after that. How long was the whole period where you were sort of giving advice, sort of totaled?
about 7 years, and I'd had a few different roles. Mostly just to UK retail clients. I spent a couple of years working for a firm giving advice to people moving to France. And that was interesting, having, studied French, that was kind of useful. Uh, but I kind of over time worked out that actually it was the investing side that I found the most interesting. It was the smaller companies, the more active end of it that I found the most interesting. And we relocated as a family down from Liverpool to Bristol, and at that point, it wasn't a great idea to try and build up a new contact base. We just had our first child, so took a couple of roles that were kind of more on the technical side, and the that led me into the world of venture capital, the world of EIS, the world of early stage investing, and a conversation came up with Deep Bridge, as they were a company that I was analyzing, and the rest is history, as they say. So.
Yeah, and that is how, I mean, I'm sure anyone listening to this, anyone who knows you will definitely know you from the venture capital world, EIS investing. What was that change like, going from sort of financial advice to retail clients to dealing with venture capital and the fundraising side of that?
It was a good question. I suppose again, you don't really find out what you're suited to until you try things. And I think I just preferred working business to business as opposed to working directly with clients most of the time. So that was an enjoyable change. I mean, I really enjoyed the whole environment. I enjoy the whole environment as I'm still in that sector, but because entrepreneurs are almost by definition quite interesting people, or you get exposed to a range of technologies, business models, people, and they're generally all pretty fired up and they want to achieve things and they want to make a difference in whatever way that is. They want to grow their business. So it's a sector that's got energy and is lots of interest and diversity in it. So I really enjoyed it ultimately, and enjoyed it enough to spend the next 9 years at Deep Bridge, and
What does
working.
it involve? So for anyone listening who's maybe not in financial advice, maybe any solicitors or anyone else, what's involved? Like in the sort of venture capital sector, how does it work? How does it work? What happens and what were you doing?
Well, I mean,
That's a big question.
it's all exactly like Dragon's Den. Uh, we sit around on big leather chairs and get people with a spotlight. It's terrible. No, it's nothing like Dragon's Den. The it's very simple at the end of the day. And I think it. I mean, I remember vividly. When I did not know anything about investing and stocks and shares and all the rest of it, had very little financial services knowledge. Then to have my eyes opened, through just exposure to people, and then through training. Most of it is not rocket science. You just have to know it and understand it. And the same in venture capital. There isn't a particularly, there's some complicated aspects to it, like in any sector, but generally the fundamentals are pretty simple. So, I mean, you're uh, investing in early stage businesses. So you have an entrepreneur who has an idea, but they need a certain amount of money to get that idea off the ground or to grow their business. And you are giving them money in exchange for part of their business. And you have to assess what the risk of the opportunity is, how fast it's going to grow, how good are the people, how likely are they to be able to execute on that, and to be able to grow their company. And that's largely it. And then you need to grow and hopefully at one point exit the company either through a trade sale or maybe a listing on a stock market, where you can sell your shares and get cash out.
I guess, so you're investing in these startup companies. Where's the funding come? Like, where's the money coming from to make those investments?
So there's a range of places. There's lots of different kind of categories of investors, and the very outset, there is self-funding. So some companies are bootstrapped, is what they call it. So you grow it, you you put a bit of money in yourself, but then you just get to revenue quickly and you grow it. The next category is the three Fs, and that is friends, family, and fools. So you persuade some people to put some money into your company, and whether if you're in a position to have a family that can do that or friends that can do that, but that kind of bleeds into the angel category, which is generally people who have kind of been there and done it before, and they've grown a business or potentially started a business and grown it, and they've sold their business, or they've just got a very profitable business, and they've got the readies to be able to invest in your business. And the best kind of angel investing also brings something to the table. So they might be in your sector, or at the very least, they bring kind of commercial experience. If you're coming out of a big corporate role with some kind of technology, or you're coming out of academia or whatever it is, then actually having someone around you who's got some commercial acumen is very useful, or they might have connections. And then you have the kind of next tier up are the kind of early stage funds, of which Deep Bridge was one, where they invest in portfolios of companies. where they qualify for SEIS and EIS, which is just a status that each company can get, which allows any investor to claim certain tax reliefs. Angels might use those tax reliefs as well, and they give certain income tax benefits, capital gains, inheritance tax.
So
And
specifically, what is it? So someone, an individual person, they want to invest in an EIS or CDEIS, but so what do they get? What is the tax advantage of those structures?
yeah, so there's the Enterprise Investment Scheme, EIS, and there's the Seed Enterprise Investment Scheme. SEIS, or the Seed Scheme, is for the earliest stage companies. That's within 3 years of starting to trade. Often those companies are pre-revenue. They are in the R&D phase and really building up their kind of technology. They get SEIS gives you 50% income tax relief. So if you invest £20,000, if you've paid £10,000 in tax, you'll get that £10,000 back. EIS is also gives income tax relief at a slightly lower rate at 30%, but that's still pretty good.
So it's effectively a refund of income tax that you've
That
paid.
you've paid, yeah. So if you've paid a decent wage of income tax, and the figures that are kind of easy to grasp, if you earn around £100,000, you're paying somewhere around £30,000 in income tax. So if you were to invest £100,000 in EIS qualifying company, you'd get all that money back, or 60 in SEIS qualifying companies. There's also capital gains benefits. So SEIS gives you 50% capital gains mitigation. So you get to take half of your investment off a gain, whereas EIS is deferral. So you get to boot that gain into the future. And then the kind of the other, the other two big ones, after 2 years, both EIS and SEIS companies qualify for business relief. So they're exempt after 2 years from inheritance tax.
For the moment.
For the moment, there is a cap on that, but there's still £1 million cap on that. So that's you've got to do some pretty chunky investing. And then there is also loss relief. So when things go wrong, because if you invest in early stage companies, some of them will go pop. And that is what the game is. The investment strategy is to find enough winners to offset the losers, and those winners more than offset those losers. You get one company that does 10x and a few that do 5x and a couple that do the 2x. It just offsets the 5 or 10 that have failed. So it's a more extreme.
And the regulatory part of my
investing.
brain is just is going ding ding ding. So to make it clear, you get these very generous tax incentives to invest in these small companies, but the major risk is they can go to zero and you could lose potentially all of the money invested.
Yeah. So, I mean, if you're investing, your capital could drop to zero on, any or all. And, that could be that'd be a really bad day at the races. Whereas if you've already got 30% of your investment back or 50% of it back, well, that's a less bad day. If you've had some kind of capital gains benefit, again, that's slightly better. And with loss relief, you get to claim an additional amount off your either income tax or capital gains tax at your marginal rate. So, your actual losses could be quite small, on any companies that go pop. So it's a really good scheme, and it's completely designed by HMRC and is vital to the kind of UK startup sector. And it's well used by angels and by the companies and by venture capital funds. There's lots of managers out there using these tax reliefs to build portfolios and help companies.
Okay, so that's the venture capital and seed investing side. I know you're also invested in, or you deal with angel investors. How does angel investing differ from the venture capital side of things?
So angel investors are just a kind of category of investor. So, they are people that are investing typically larger amounts of money. as an individual. So they are genuinely your kind of high net worth and ultra high net worth, where they're going to be able to put 50 to 250, on average, pounds into 50 to 250,000 pounds into a company, and they can do that. They can make that decision themselves. They don't need advice to do it. Most people would go via a financial advisor if they want to invest in EIS or SEIS. And that you as an advisor can help build a portfolio or build it into their portfolio and make sure they're not investing too much and they've got a diversity. Angel investors are just doing that themselves. They are taking care of all of that kind of risk element, and managing their portfolios off their own bat, or at least that element of their portfolio. That's what they're doing. And as I say, that you'll find people who have worked in certain sectors and they're interested in investing into certain sectors. So locally, there's an awful lot of people who are investing in silicon chips. One of the most successful companies around Bristol is called Graphcore, which designs silicon chips. But that's because in South Wales and around Bristol, there's a history of that. So there's a lot of people who've made money out of that. There's quite a few people who are invested in cybersecurity. That's a growing area. Cheltenham is the home of cyber security in the UK because of GCHQ. And so you get these kind of sectoral kind of biases in certain areas. So yeah, that's really why it differs, and that differs from a fund being run by professional fund managers, and then you get the ones who are who raise under SEIS and EIS, typically through financial advisors. And then there are venture capital funds who raise money from more institutional investors. It could be corporates or it could be pension funds. So, if anyone's been listening to Rachel Reeves, or prior to that, Jeremy Hunt at the Mansion House speeches, which are less telegraphed than the budget is, but probably more significant in many ways. There are some big changes coming to some of the bigger pension schemes in grouping them together, so they benefit from economies of scale and more professional management, but also allowing them to invest in more private assets, because venture capital, by the kind of definition, is investing in private companies rather than listed companies that most people would be able to access either through a financial advisor or on Hargreaves Lansdown or something like that. So
Okay,
yeah,
yeah, that
there's a
makes
whole
sense.
range.
So you spent near on a decade in the world of venture capital and seed investing. You have recently set up your own consultancy business called Climb the River. Tell us about that.
So yeah, I mean, that is an element of forging your own destiny in a way. And I have some kind of medium to long-term irons in the fire, but I shall keep those a secret. Everyone has to watch this space. But I'm well involved in the ecosystem of venture capital, especially in the Southwest and South Wales. And there's one of the great things about this sector actually is that it is an expanding sector. Like plenty of places or industrial sectors seem to be contracting or they're really suffering, but actually there's an awful lot of positivity in this sector. Universities are really fired up about helping their students, both undergraduates and graduates or postgraduates, to start businesses. They're much more well set up to incubate those. Certainly locally, the University of Bristol and the University of the West of England are spending huge amounts of money on lab spaces and campuses to incubate early stage businesses. And there's all that pension fund money, but there's been a lot of new funds starting up. So I'm helping a relatively new fund establish New Future Ventures down in Exeter. They're a startup studio, so they're finding software companies that they can actually help to actively build that company with them, and they're kind of matching that kind of accelerator program with a small fund. So I'm helping them to do that, but equally I'm helping a load of companies to raise funds, because it's a massive problem for a CEO of a business. They've got everything to do, and then to
As in capital raising, as in getting
yeah, as
finance.
in capital raising. So they've got everything to do in terms of building their business, in trying to find people to help them do it, trying to sell whatever, develop their technology, sell it to people, growing revenue. They've got to run their business, but at the same time, they've also got to go out and persuade people to invest in them. So that is something that I can help with. I've got a lot of experience of how to present these kind of companies to angel investors and to venture capital funds, and how you have those conversations, and how you actually ultimately get those funds to be able to grow your business. So
So
that's
would it be fair to say, so is there two different clients in mind for the sort of this new venture? So you've got businesses, i.e. end businesses that are looking to raise money to fund themselves, but then also venture capital investors that are looking for those companies or looking for the
yeah.
opportunities.
So it does kind of, in some ways, this whole nature it faces both ways in a way, and again, that is a problem for investors, is that they want to find good businesses, but they either they can't spend the time to actually go out and go to every pitch event, and they haven't got the kind of platforms, the software in order to do the research, and they're not on the ground enough. That might be time, might be geography, whatever it is, and investors really like to have good opportunities in front of them. You want to see the best companies, so that it's a real privilege to be able to kind of work in that sector and be able to meet so many companies, because and in fairness, I'd say that most of them are pretty credible. There's one or two companies you come across, and you're just like, really, is that really a business? But most of the time, actually, most people and most companies, startups, are pretty credible. But there are also some absolutely fantastic ones out there, and those are the ones that are really exciting to help, and put in front of investors.
So it sounds like a really interesting new venture. And it ties very nicely. Obviously, we talked a lot about the private client network in our very first podcast
Mm.
um, earlier this year. But how does that tie in? So how does the private client network tie into what you're doing now?
So, I mean, I think it's in two ways. One is the kind of power of networking, and how, you are your network ultimately. I would not be able to do this role if I didn't have a network. I need to have a network of both companies, but also investors. So I need to be, networked on both sides. And I suppose directly the private client network, fits in terms of investors, because there are financial advisors who, by their very nature, have clients who are investors, and they're giving advice on these kind of portfolios. And then you have accountants and solicitors who work with companies or individuals or family offices, or you name it. They're working with people to solve their tax issues, to solve um, their family trust issues, or whatever it is. So people who are connected, and sometimes these people are successful in their own right, and they're investors in their own right, so they can be. Um, it's a really good network from that perspective. But mainly, I think it's just the fact that it really shows the having a good network is a really good safety net. And if you ever need to use it, then you really can. So,
Yeah, I completely agree. I mean, obviously, we are very, very biased when it comes to advocating the virtues of networking. But yes, I very much agree with all of that. We're in the process of hiring a new financial advisor, and it's been very useful to be able to sort of share that sort of on with the private client network and get the word out that way, and also, even with people who are not financial advisors but maybe solicitors or tax advisors, they're liking and sharing, and that sort of spreads the word a little bit. So yes, I very much agree on the virtues of a good personal network and networking generally.
mm.
um that's been really good. Thanks for thanks for taking the time. I know I pestered you into being a guest, but yeah,
Well,
it's
thank you, Charlie.
interesting, and I know a lot of people will know you from the events and everything, but I'm sure there's bits about what you talked about that they wouldn't have been aware of. So it's really valuable. So thanks for coming on.
Yeah, well, no, thank you. And I hope it certainly, I'm sure there are bits of my life that people don't understand, but equally, I think there's um, these podcasts are great because they actually open up certain sectors to you. I know, having listened to a few of these podcasts, I haven't listened to 100% of them. The how dare I? It is fascinating because you don't understand the ins and outs of everybody's profession or sector. So it is interesting from that perspective. So, and yeah, at some point in the near future, we'll have to do a reverse interview
Oh, I'll be on the other side.
and,
Yeah.
and have you on the other side.
No, that sounds good. That sounds good. Cool. All right, Simon. Thanks for that.